Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, February 16th. Today we have PPI month over month and building permits. That's the most important thing is PPI. We need to have more data regarding inflation, and right now, after CPI hotter than expected, after yesterday's retail sales super high, today, PPI will complete the picture of the actual inflation. And let me tell you, if PPI comes higher than the previous one, that this is the consensus, the previous one was negative. If PPI comes hotter and higher than expected, positive, that means that again, inflation is coming up on the producer side. And what will happen in the near term, in the short term, in the coming weeks, that inflation will go through the supply chain and end up in our side, in the client, in the consumer side. And that would be the reason why it will probably affect CPI on a bad way. It will come higher again. So watch out, because PPI today has the key to complete the picture about all these data that we've been getting this week. And I think it would be super bad for the markets. So watch that. Also watch housing markets, because housing is also one of the sectors that Feds are watching to decide on future interest rates. And I think that's super important. Today we'll complete the picture, and tomorrow we have nothing. So we have CPI, we have retail sales, and today we'll have PPI. So be careful today, watch out, be patient, and react to those numbers, because today it's going to be super interesting and super important. Let's go back to the charts. This is a forecast, so let's quickly review what Nasdaq did yesterday. Clearly, higher highs, higher lows. I mean, it's quite easy to see that Nasdaq yesterday was quite bullish. So actually, we finished the day in a very trend bullish day. Volume profile with the point of control at the bottom shows us that there's a lot of longs still on the market. And look at the volume. You see this? This is a late spike. Late spike shows you that during this move, during this late move in the last hour of the trading, regular trading hours, there was a big increase in the move on the price and volume, and markets didn't have any time to react. So there are some rules regarding late spikes and late moves on the day that say, in summary, that we need to hold these levels. The pivot that we broke during the late spike, it needs to be held in order for us to continue to the upside. So if we hold today, right now in pre-market, we are holding that. So that's good news for continuation. But remember, PPI today is a fundamental data and it may change everything. But let me continue explaining late spike rules. If we hold this, we can expect there's higher probability of markets accepting this price and continue higher to most probably this blue dot line. That's last week high at 12,818. What happened if we are in between the pivot and the base of the late spike? Well, this is the pivot. Let's mark this pivot, and let's also mark the actual critical area. So as long as markets are above this area, it's bullish. In this area, it most probably will just go around these two levels, trying to hold this base. But the thing is that if we break this base, and I usually I usually draw the lines for support on the 30-minute chart in the open of the candle. I don't take into consideration the wick, so I would like a close below this support in order for me to be bearish. So we have clear rules, and I think it's a good opportunity for us to take advantage of this spike that happened yesterday. And right now, I would like to be bullish. But fundamentally, I will wait for the PPI to take more decisions, because if we check the slower time frames, the 5-minute chart, we were trying to be some kind of bullish, but we are right now in pre-market. We are not. There's no trend. We are basically flat. Close what was 12,747, we at 742, so we are basically at close level. But look at this. I usually pay a lot of attention to the third at 3 in the morning, US time. This is UK. This is Euro open. And look at this. This is a rejection. So I'm watching this kind of trend start going down and enter the late spike zone. If we check this zone, and I expect it to start trading between this zone, if we fall below this support of the base of the late spike, I will turn bearish, because price action basically will show that markets are not accepting this move and are starting to go bearish. But again, this is from the technical standpoint. Be careful, because today we have PPI fundamental and we have to wait. I will wait for that to come out in order to reinforce my bias and my position. So for now, I'm just waiting for price action for markets to see if they accept the late spike. Some other things that I already talked about in yesterday's video that are super important. Let's see dailies. Dailies, if you check the dailies, you see here clearly there's a lot of wicks in here. 1 week, 1, 2, 3, 4, 5 weeks that we are not closing above. We are rejecting that high pricing. In the 5-minute chart, I have a trend line that clearly shows you each time we've been going with a lower high, lower high, lower high. This was CPI, yesterday's retail sales, and we spiked. It makes no sense for me from a fundamental point of view to be this high. So sometimes markets are irrational, and I can expect that, I can respect that, but I will start showing you these kind of things, these weak rejections on the Nasdaq, and also on the ES. There's this 13th of December rejection on CPI that everyone on earth that is trading the markets are seeing. And look at this, it's at same level. I have also this pivot, but look at this zone. This red zone is the critical zone and it's being rejected. I really think there's big players, funds, banks that are selling at these levels. And I think they are right, because from a fundamental point of view, CPI was not good, retail sales were not good, and PPI, if that shows a bad number, showing inflation on the producer side, this will just trigger more selling. And the worst thing about everything is that all these moves are 90% retail. This FOMO, this hype, this bullishness, it's all retail. And it's coming also from the options side. 10 to 15% of options volume throughout all this week, it's been only retail. Retail are pushing markets to extremes, and they don't care about fundamentals. Let me tell you, they don't care about anything. They love Tesla, they love Nvidia. These moves are based on options, and right now Tesla is 1.58% gapping up. So this is crazy, but this has nothing to do with fundamentals. We are supposed to follow fundamentals in order to have better positions. And right now, retail is just all in, FOMO in everything, more in Tesla, Nvidia, and Apple is also showing this kind of breakout pattern. This is a cup and handle pattern into a breakout flat top. This is from a technical standpoint, this would be huge. But I don't think fundamentally we are in a good spot to let this thing happen. Options are the reason why this is happening. People are getting squeezed on Tesla and they are betting 220s, 250s, insane levels. So let's check that thing, because I think it will open your eyes even more. Tesla 417. Look at this. 200 calls. Oh, by the way, this is 1 million open interest. So each one of these picks is 50,000 calls. 200, 210, 220, even 250. These guys are crazy. And also on the put side, look at this. So there's basically more reason for Wall Street to manipulate the markets up to FOMO into these levels and trading between this narrow range, and it doesn't make sense in the overall picture of the economy. And also, that's Tesla. If we check SPI, if we check 17 Friday, there's a huge amount of puts that for this reason markets are not going down. I've explained a lot of times in this channel why options are manipulated the way they are, and this is the reason why Wall Street don't want to pay these guys. And also, not only there, it's 325,000. All these mountains of these walls are hundreds of thousands of puts. There's a lot of puts on the system. So obviously, I think markets are being manipulated and pushed higher, at least this week, for all these 3.5 million open interest amount. Next week, something will happen. I think that would be really bad. So when I explained to you the kind of rejections that we are getting on the dailies, the kind of sentiment that is flying around everywhere regarding these technical moves, I explained you why options are the main reason why markets are not going down. And let me tell you, I have some more news. Dollar is having a lot of buyers. Weak. This is accumulation. Yesterday we had a big move. We have a 0.52% move on the dollar. And in times of uncertainty, in which interest rates are going to be huge a lot of time throughout all the year, money is going to be in the accounts, in the bank. And having money in the bank during interest rates it empowers that money. That money will be more valuable in the long term. And I think more than that, Forex traders are seeing that and are starting to accumulate on the dollar. Yields. Yesterday we pulled back a little bit, But look at this move. I explained this move at this candle. I already told you this is going to hit these levels. The 2-year is 4.58, and honestly, it's targeting this 4.8% for the 2-year is going to be insanely painful. 10-year, the 10-year right now, also I mentioned this breakout to the upside and this descending line. I mean, it's clearly that yields are going up with the bad news that we are getting, and Fed will continue raising interest rates by a lot. And also one of the main things is bonds market. You have to follow bonds. These guys manage risk like anyone in the planet. These guys are experts on trading risk. So the stock market is telling us just push the market, FOMO into everything because everything is good. The economy is good, everything is good. And on the other hand, there's this divergence, bonds market telling us yields are going to be insanely high. And we all know that tech stock, Nasdaq, and gold, look at gold. Gold hates interest rates. And gold is actually moving like we should expect the stock market to move. Look at this trend. We started seeing weakness. We bear flag, continue lower, super huge distribution, and then continue lower. Gold is behaving like the stock market should in terms of fundamentals, dollar, and yields. So be prepared because at some point we are going to explode to the downside. I will try to short everything from now on. I'm going to be super careful this week due to options expirations and the manipulation that is everywhere. But from next week on, I'm going to take advantage of this setup because the risk to the downside is super huge for bulls. I don't want to buy here for small breakout for then to basically carry the back until the lows, until who knows where. So I think the cost opportunity, the risk opportunity is on the short side. That's the better profit loss ratio. And I will honestly continue trying to short. I've been shorting throughout all this week, and I really don't understand why people are buying and are not being patient. And more than that, are not paying attention to all these divergences that we are seeing in other markets. I try to explain to you and I try to provide you with my information, my point of view for you to take decisions. I will justify and provide reasons, and you should trade what you think is the best for you. I'm just explaining what kind of signals and indicators I'm seeing, and it doesn't make sense. Yields are going to be at 5.23 in September. Do you really think that tech stocks are going to be good or bad during all these times? That's for you. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel. If you found this video useful, support the channel. That's the main thing. Thank you for everyone subscribing and watching my videos. I will continue providing you with my honest insight and my honest understanding of the markets. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always, and see you in a couple of hours with the market update afternoon after lunch. Remember, discipline and risk management are key for success. Remember the late spike rules. This zone is super interesting. I'm waiting for this zone for price action, for price to reach these levels and see how it reacts. That would be my key to go all in on the short side or be more cautious on maybe taking some short scalps. So see you in a couple of hours. Stay safe, everyone. As always, be patient, react, have a plan, and risk management is the most important thing of everything. See you later.